Hi there, traders. This is Brad Gilbert with today's trading action. Now, just a bit of a quick recap. The Bank of England vote count, right, whether they're going to change rates or not, changed from a 8-1 to a 7-2. Now, that is a sign that they are getting closer to changing rates, right? This is important because it leads us into the next big move. And out of all the central banks, I think sterling now, you've got to start focusing on sterling because it is starting to rock the house, giving us very clear direction. The central bank is running towards cutting rates. And you can see here, sterling Aussie down, sterling Kiwi down. Now, I think sterling yen is a target for us because I know it's sort of been going up with the yen, dropping off the face of the earth, but it will kick in at some stage. And the Bank of Japan are going to have to come out and give it another push. That could be something to look for. Euro sterling starting to go up again. Sterling Swiss down. And we're starting to see sterling CAD roll over. Now, why am I going through all this stuff? Because straight after a central bank announcement, right, you get the initial sort of feeling for what they're doing, what the plan is, and all these components. Now, you add in there the upcoming economic data, and this is the best time to strike, right? Because we know exactly the momentum, how sterling is positioned. So today's UK data is definitely massively on the radar. GDP numbers for sure. For me, the main one here is manufacturing production numbers. Okay, now there are some construction numbers there as well, but this number here has always been a bit of a head kicker. So I'll be watching that very closely. You've got their one of their analysts talking as well, so just keep an eye on that. And ECB monetary policy accounts, and that's followed up with the Canadian employment numbers. So quite a few opportunities. Now, you don't have to go chasing trouble. What I'm trying to say is with the sterling numbers at the moment, because of what happened yesterday from the Bank of England, right, we do have clear direction in sterling. So it makes it easier to jump onto these trading opportunities. If the GDP numbers and the manufacturing output numbers come out weaker, well, the market will be factoring in a cut earlier than August, right? A 0.25% was factored in August. They're already bringing that forward. Weaker numbers now is the perfect time for it to hit the sterling, and you'll see it drop off, especially against the crosses, right? Because when we start to look at sterling against the dollar, right, well, actually, it sort of distorts things somewhat because if I just come back to the major currencies there, we had US jobless claims number, right? The weekly jobless claims number. There was a spike in claims, which follows the weak non-farm payroll. So, you know what? The dollar is starting to drift lower, and that pushes sterling up against the dollar, right? So really knowing what to trade, because sterling against the dollar is going up. I wouldn't be looking for trouble. Take the US dollar out of the picture and then go from there. Now, dollar CAD will be in the framework, obviously, with the employment numbers. You just need to sort of keep track of what they are, and I'll give you a look at the what the expectations are. So just coming back to sterling, and the clocks have just reset, right? So you don't get a true picture of what's going up, what's going down. Today, make sure you follow what sterling's doing. To me, sterling against the dollar will be the only sterling pair that's really going up, okay? But we'll see closer to the event. We've got a bit of a risk-on profile here at the moment. So euro, sterling, Aussie, Kiwi against the dollar is going up, and the dollar is going down. So that's good. I like the fact that sterling's going up a little bit. Against the crosses, it won't do much. Right? It won't go up very far. But if it does, it sets us up to get short at better levels if the data comes in weak. All right. Let's just have a look now at the data here. If I just come back across. Right. So we've got the numbers coming out. If I just go to News Squawk, give you a bit of a look here at the ranges. This is the most important aspect you need to be following. Manufacturing output, right? This is what I was talking about. Minus 0.7 to plus 1. And the forecast there is minus 0.4. It's absolutely key that you're all over that. Obviously, the GDP numbers are, they are usually a really important number. To me, it's more the sort of the second tier numbers which are really coming into play. And there's that chief economist Pill. He is speaking, but the text was released on Thursday. And if I just scroll down just a touch more, you'll get the Canadian employment numbers, right? These numbers are the same, released the same way as the Aussie employment numbers. The range here for the change, 28 to 10 and 18, right? So Bank of Canada, what we need here to get Canada sort of falling would be a number below 10, right? Weaker employment numbers. Like what we're starting to see is finally a shift in the US numbers and all the other numbers. So I can see a situation where we're going to have a bunch of central banks all coming out prepared to start cutting rates and getting active. And that means good trading opportunities for us. The unemployment rate, just keep an eye on that, 6.2%. Any sort of blowouts and weaker change would lead to the Canadian dollar going down, so dollar going up against it, but all the CAD crosses getting hit there as well. Now, don't forget, full-time employment is a more meaningful number than the part-time, right? So if you are looking at various aspects and trying to weigh that up, make sure you understand what we're doing there. So big day on the cards. We've got clear direction in sterling right at the moment. The market can't, this is what I'm talking about. The market cannot be confused with what is going on in sterling at the moment because it's clear as day from the Bank of England meeting exactly what they're doing and what they're looking for. So make sure you focus in on sterling if you get a chance today. It could be a good chance to get into that short trade. If the data comes out stronger, well, it doesn't change the picture for the Bank of England. You may see a bit of a retracement. It could be a short-term trade there, but the better trade definitely with the current weakness in sterling, and that's what I'll be focusing on. All right, guys, have a good trade day. All the best. Cheerio.